Hello, guys. Hello, everyone. Thank you for joining us on our weekly live stream here at Exness. My name is Antreas Themistokleous. I'm a trading content specialist, and today we're gonna be checking on what's happening in the markets, what data do we have on the economic calendar, some fundamental analysis, some technical analysis. We're gonna be checking on different charts, different instruments, checking the news, seeing what's happening around the world right now. But before we begin, I would just want you guys to let me know if I'm coming through okay. Where you're watching us from, just write the name of your country or your flag or whatever you like. You're more than welcome to ask questions in the chat, or if you want any specific instrument that you want me to analyze, and I will come to it after the presentation, after the main presentation. Okay. Okay, we have one coming from Ghana. Hello to Ghana. What time is in Ghana right now? Nigeria. Hello, guys. Okay. So I think we can start. All right. So first up, I'm gonna be using today Exness's platform. You can see every tool that you need, any indicator that you will use. Is quite user friendly and very easy to use. Very simple to open any trades here. Just one click, click the lot, and open the trade. Super easy platform to use, user friendly. All the indicators or the tools that you might want to use is on the left side here of the platform. But we're gonna be checking everything later on. So okay, let's start on what's happening this week. Let me quickly refresh here. Usually I use the economic calendar on Trading Economics. Is very user friendly. I'm not in any way, shape, or form representing any of the website I'm gonna show today. I just find them super easy to use. All right. So what I do, I go on Trading Economics every single morning, and I click what's happening this week, or you can select anything that you want, and then how important the impact of those news is. So I tend to usually use the 3 stars. This is the most important news that we will gonna get this week. Early in the morning, we had unemployment rate in the UK. It was expected to go from 4.8 to 4.9, and it actually came out at 5%, even higher than the expected. So unemployment is not performing that well in the United Kingdom. Of course, this data was for the month of September, right? So it might be already priced in, but since we had a small unexpected surprise on the actual figure than the expectations, we're gonna see how it affected the British pairs later on in the charts. All right, on Thursday we have again from the UK, we have GDP data coming out. We're gonna have the month over month for again September. Again, most probably it's priced in. We are already almost midway November, so not too much volatility expected there. But again, if we see a surprise as we did with the unemployment rate, we might have volatility on the British pound pairs. Also, we're gonna get the year over year and the quarterly data. These are preliminary data. Preliminary means it's not the final figures, but we get an overall estimation or a snapshot on what's happening with the British economy on a quarterly level and year over year. All right, so both of these are also expected to decline slightly from 0.3 to 0.2 for the quarterly data, and from 1.4 to 1.3 on the yearly data. Again, not too much change expected, but again, any surprise creates volatility. All right, so and also on Friday we get the Chinese industrial production. Why it's important? Because Chinese manufacturing, especially sector, affects greatly the production related instruments like crude oil, copper, silver. So it's important piece of data that we need to monitor if we're trading those instruments. All right. So the previous figure is at 6.5%, and the expectations are for a whole percentage point decline. So if that's confirmed, then we might get some pressure on the production related instruments, as we mentioned, like crude oil, copper, and silver. All right. Yes, in gold we're gonna be checking for sure later on in the charts. All right. So what I wanted to mention here is that we still have the U.S. government shutdown ongoing. All right. Of course, yesterday we saw the Senate passing the deals to end the shutdown. They need to go through the House, get vote, and then signed by the president, and then we'll have the government working again. But not sure if there is enough time to do that and get the inflation data, which is due on Thursday. We haven't had USA data for a straight month, which is kind of weird. I mean, US data move the market, right? It's very important. So when you don't have that and you rely mostly on technical moves and less important data, then trading gets quite tricky. All right. In any way, if we do get the inflation data on Thursday, which is probably not enough time to do that, but if it does, we're gonna see how it affects that. Just why am I mentioning that? Because if you are actively trading, especially if you are scalping around publication times, then you need to watch out for the inflation data publication on Thursday, and also the producers price index on Friday. Okay, so yes, that's what I wanted to mention about the shutdown, which has been a record 41 day. It's been, I think, the longest that we had the government of the United States not operating. I mean, we did have multiple U.S. government shutdowns in the past, but I think this is the longest one. All right, so moving on to our charts. Okay, as I mentioned earlier, Exness is in a platform. You can find all the tools that you need on the left-hand side here on the bar. You can have your watch list. You can have the economic calendar here. You can also just, if you click here, you see high impact. You see all the data from the economic calendar also straight on your platform. And also you can see, you can search for different instruments. Of course, you can just do it by clicking the plus sign here and just search whatever you want, and it will pop up here. All right, so that's another way to get your instruments. You can compare, you can just add any symbols here, you can change the timeline. and everything from here. All right. So moving on to gold, right? We already had the first request for gold. Hello, streaming from Nairobi, Kenya. Hello, Joyce. Joyce, I think it's with us every single week. Thank you, Joyce. All right. Now, moving on to gold, what we see on the daily chart of gold was the price action and what can we do about it. By the way, before I start showing you any ideas on the charts or anything, I just want to mention this is not financial advice. It is just my personal opinions. I do not represent Exness on any trading that you might initiate based on what I say. This is just for educational purposes only. All right. Any ideas that I have is my personal ones, right? It's not investment advice in any case. All right. Now, so what I see on the gold chart, as we mentioned last week, we see a great extensive and aggressive bullish rally that has been going on for almost 45 to 50 sessions. Let me calculate that. Let's say it starts from here and ends up around the retest here. So we have 52 bars, 52 sessions, straight sessions without any significant correction. This never happened before, right? So after extensive rallies, either to the upside or to the downside, doesn't matter, right? We usually get the Fibonacci levels working like a charm. When we have, especially if it's steep or continuous rally, what I like to do here is, let me remove it so I can show you what I do. I just go on the indicators tab here and I click on Fibonacci retracement, right? I find the lowest point of the trend with the highest point of the trend. Let me make this, yes. And then we get the Fibonacci levels, right? These are the Fibonacci levels. All right. So what I like to do is after the rally, it usually tends to correct around the 38.2% of the Fibonacci retracement level. In some extreme cases, it might go down to the 50 or even 61.8 if the correction phase is very strong, it's very aggressive. All right, but usually it tends to correct around the 38.2 and then retests the 23.6. So we have an aggressive trend. We draw our Fibonacci levels, we see a retest around the 38.2, and then usually it corrects to the upside. All right. So here's what happened also on gold, and this actually applies to any instrument. Doesn't matter if it's crypto, especially crypto. Fibonacci levels tends to work very well. Crypto, commodities, forex, any type of instrument. This strategy is not strategy; it's just a technical observation. Tends to work. So let's say we were around here, which, by the way, if we are here, right? What I usually do is I open a pending position. I almost always use pending positions rather than market execution. Why? Because I tend to get the price that I like. I don't get any slippage. I don't get delays or anything. It's just pending orders. That's my value. That's my entry point. So I just use pending orders. I like pending orders. All right. So if we are here, let's say 5th of November, we hold 5th of November. I'm gonna mention why I'm mentioning 5th of November, right? I would open a pending order with target the 4,000 in this case, just above 4,000, and the target might be the 23.6, in this case 4,130 ish, right? So here would be where I would open my trade, and here is where I will be getting my profits, and still keep it open, by the way. All right. I mean, I do use take profit targets, but if the price moves in the direction that I want it to go, then I modify my order and push my stop losses higher, locking profits as the price moves to the upside, right? So why I mentioned the 5th of November, because if you are watching, if you are following Exness social media, you would see that we had the market outlook, which is a weekly video. And here it is, my colleague Michael Stark. It's a weekly video that we show a trade idea for the week. And in this case, it was, I don't know if you can hear the sound. I think not. But anyway, the idea was that buying gold and buy on gold exactly on the 5th of November with target the 4,150, right? Now, Michael just discusses why this trade idea is a possible one. We give a fundamental analysis behind it and also a technical part. He mentions the Fed rate, how it affects gold. We're going to be checking that also later on. And which data from the economic calendar affects this trade, right? So this is a weekly video, and in the end we have a summary, right? So gold could bounce and retest the 4,150 or higher. This video was published exactly on the 5th of November, which is right here, and the target was 4,150. Still has some room to go, but most definitely will achieve that level. So why am I mentioning that? Because if you're stuck and you don't know what trade to take, or you don't know how to find the reasoning behind an instrument that you want to trade, then the weekly market outlook might be a good starting point, because it's a weekly video. We have every week another instrument. We do gold and crypto quite often. So if you are only trading gold, you can find some trading ideas through that video. And also we give reasoning behind why we suggest, let's say, the idea that we suggest every single week, right? And we also keep track of it, so you know our success rate, how successful we are in these trading ideas. So yeah, if you go on YouTube, search Exness, follow and subscribe to it, or turn on notifications so you get notified when this video is coming out. Then you will have at least one trade idea for the week. All right. Now, so what we do now on gold? Currently, I am waiting to see if there might be any reversal signs on the horizon, which currently we don't have. But I'm not very confident into opening a long position on gold. I don't really like the positioning to buy gold. If I were to buy some gold, I would buy with very small positions, not too much risk, and just try to lock profits as it goes up, because let's be honest here, 4,300 and let's say 4,400 might be the ceiling here. So probably not too much space for profit here, and it's kind of risky area to initiate any long trade. The price might continue going up, yes, and feel like you're missing out, but we're near the all-time high. It's not very wise to buy gold right now. I'm just waiting out to see if it continues to the upside a little bit, and then try to find an area that I see that the price has difficulty proceeding and getting higher, right? That's the area that I will be interested in opening some short positions. Shorts are more risky, right, than long trades, but when you're trading near the all-time high, which is almost like $200 from the current area, I'm not very confident in that. So what I would personally do in this case, I would wait out and see probably around the upper band of the Bollinger Bands here. By the way, if you want me to explain what all these lines are, I'm more than happy to do that. If you're not aware, just let me know in the comments. So because I'm gonna be showing on all these lines on the majority of the charts that I will be showing, right? So if you guys need some brief explanation on what all these lines are, just let me know in the comments. All right. Okay. So personally, what I would like to do is wait out and see if I see any bearish pressure building up, probably around the 4,250 area, which is the upper band of the Bollinger Bands, and it's also the kind of support level here. Let me draw that for you. 4,250 is the area around here, right? So it's where the price found sufficient support after it corrected from the all-time high. What I mean by that is that it reached the all-time high and then it corrected right exactly 4,250. Then it tried to go below that, it failed, and then bounced back up, which it was also the floor of that specific candlestick, let's say on 20th of October. I mean, even intraday, the price failed to break below this level, and then we had a massive bearish pressure, and then we had the correction phase. So the 4,250 is, from the technical analysis perspective, quite interesting, right? Okay, talking about gold, let's check on what's happening in the probabilities of the next Fed's meeting. All right. So, what is this website where you can find this? You can go on cmegroup.com, you click on markets, interest rates, and then the CME Fed Watch tool, or you can just straight up Google Fed Watch tool. You will get the results. I get the straight up to the website, but it's the first result, Fed Watch tool. That's what it's called. Okay, so what is this website showing us? We see the Fed's meeting, the upcoming one, 10th of December, and then all the future meetings all the way up to October of 27. All right, so what is this? Is the probabilities of the Fed cutting or keeping rates stable or hiking the rates. So we get the current target rate, which is the 3.75 to 4%. And here are the probabilities of keeping 375 to the 4% or cutting to 3.5 to 375, right? So we see that the probabilities is that the Fed, the probabilities lean towards the Fed cutting the rates on their next meeting on the 10th of December. So what that means is that if we do get another rate cut, usually we get support on gold. We get a boost on the gold price. So when these probabilities shift towards the, in favor of a rate cut, that usually boosts the price of gold, right? By the way, these probabilities shift by the day, right? So, for example, now we have the government shutdown and we don't get inflation data, right? But when we do get the inflation data, then these probabilities will shift. For example, if you check on this little table below, you see the current probability, which is 63.7. What it used to be yesterday, you see, yesterday was almost 67%, so now it's declining. 1 week before, which was 68, but if you check a month before, the probabilities was 92% almost of a cut, right? So it was almost certain that we will get a cut, but now it's kind of debatable, right? But as we get closer to the 10th of December, we will get more accurate probability percentages here. All right. So moving on to some other instruments. Crude oil. All right. So what's happening with crude oil? We have a quite interesting setup on crude oil. This greenish area here is the technical resistance on the price, which is the area of 62. Why it's important? Because the price retests this area multiple times over the past couple of months, as also as a resistance, as a support. So we have multiple retests of this area, so it automatically means that it's a very strong area on the chart for crude oil. What I wanted to show is, STO forecast, the short-term energy outlook. And why is this important? This is the U.S. Energy Information Administration, right? This is the body that discloses these data. All right. So what we see here is the price of crude oil, right? We are about here, which is the darkest bluish line here, and then we have the short-term energy outlook forecast for the price of crude oil going into 2026, right? So what do we see here is that the fair value, let's say, of crude oil by the end of 2025 is around the 50-ish area, right? So according to this forecast, we might see a further decline from the current levels by the end of the year, around the 50, probably retesting the lower end of the recent low here in 20th of October. So why am I mentioning that? Because if you are a more long-term trader and you're trading crude oil, then the overall trend might be expected to be rather bearish, right? So the current minor trend might continue moving down. And also, if we take the higher trend, it might also support the bearish movement until the end of the year, at least, which is also confirmed with the futures market here. All right, so what we can do on what I can do on crude oil in terms of trading. Let me zoom in a little bit here. Okay, so come on. Okay, so as I mentioned on gold, same goes with crude oil. We had a rather aggressive bearish correction in this case to the downside. So if you draw your Fibonacci's correct from top of the trend to the bottom of the trend, you will find some retracement areas. You see the 61.8, which was around the 62.30 ish dollars, was sufficient resistance to hold the bullish correction after the bearish momentum in the market here in late October. Then it corrected to the downside exactly on 38.2, rebounded to the upside exactly on 50%, and then rebounded to the downside again at 38.2. You see what I mentioned previously on gold. Here we had a bullish trend, active, extensive bullish trend, and then correction to 38.2, right? Here we have a bearish trend and a correction up to 61.8. You see that? 61.8, but it never retests 23.6. So that tells me that since I'm using this strategy, I might want to be watching out for some reversal patterns on 38.2 to get the 23.6 of the Fibonacci, which is around 58.5, right? For now, I don't see that. So what I will do is probably open some trades with targets around the $61 here, which is the combination of the 50% of the Fibonacci and the 50-day moving average. So if it crosses above this area, then I will be moving my stop loss to the upside and then keep the trade open until it retests the $62, which is the major technical resistance on the price, right? 62 area is kind of the medium term target, let's say, but I'm not heavily investing in this trade because moving averages are also validating a bearish trend, right? And so we see when the 50-day moving, when the faster moving averages, the slower time frames, in this case I use the 50 and the 100, so the 50 is the faster moving average. When it's trading below the slower 100-day moving average, which is the more long-term moving average, then that means that we are still in bearish trend despite the bullish correction and the minor bullish action here since late last week. So moving averages are validating a bearish trend. The stochastic oscillator is in neutral levels, okay, nothing too flashy there, but Bollinger Bands here have contracted quite extensively. So that tells me that volatility might be slowing down. The trend has yet to reverse, so we are still in bearish terms, but there is not too much volume to support, you know, significant continuation to the downside. So probably for the next I don't know, days, probably weeks, we might see some sideways action on crude oil between the 62 and the $60 dollars. So this channel might be the short-term play for crude oil. All right. Let me quickly. All right. Okay, so this is for crude oil. Let's move on to the next popular thing, Bitcoin. All right, so too much lines here on Bitcoin. Again, if you guys need any explanation, just let me know. This is the stochastic oscillator, and this is the ATR. It's the average true range. It shows how much the price might move in a specific period. In this case, we see $3,800 might be the intraday move for Bitcoin. Let me make this a little bit smaller so I open the chart more clearly. Okay, So what's happening on Bitcoin? Sorry, we have a very aggressive bearish action happening in the past month or so. But recently we have a correction to the upside, minor correction. It does not mean it will continue. It's a minor correction with a rebound on the lower band of the Bollinger Bands, and now it's testing the 38.2 of the monthly Fibonacci retracement. You see, I have two Fibonacci retracement charts drawn here. Why? Because one is for the latest swing, which is the let me make it, yeah, which is the latest swing, and the other one is the longer term, is from 6th of April until today. So these areas are more valid or has more reaction when the price reaches those levels. For example, we see if we take the long term, let's say, let me draw that. Let's say we have this, then this, correction to the upside. Let's say this is our major trend, let's say. So you see that the Fibonacci levels tend to cause price reaction. They are strong support and resistance levels on the chart. So that's why I use them, especially on crypto. So you see here the 50%, which is around the 100,000 level. It's a very strong technical support on the price. And the price is currently testing the 38.2. So what I can see or deduce from this is that if the 38.2 holds, right, then we might see some retracement down to the 100,000. You see here the price has, let me zoom in a little bit here. The price today has intraday went above the 38.2, but is come back down, right? So that means we have some strong resistance here on the price. So what I would like to do here on Bitcoin is, by the way, first of all, I am overall bearish on Bitcoin somewhat, because we see here the moving averages are also validating the bearish trend. The green line here is the 50-day and the blue is the 100-day. So moving averages are validating an overall bearish trend, right? The stochastic, due to this bullish correction, is back in neutral levels. So that means that there is potential to move further down. Is not in extreme oversold levels, so we can still see a correction to the downside. And also Bollinger Bands are very expanded, quite expanded, you see here. So volatility is there to support any significant move in the short term. Now, I don't want to open a short position just yet. I need the price to move below the area here of 105, below 105. One, because 105 is the psychological support of the round number, and we're human beings, we tend to react on round numbers. And it's also an area on the chart where the 105, I mean, where we had a retest or a price reaction earlier in 2025, right? So again, in the short term, I'm more bearish on Bitcoin, but when we have the US government shutdown ending and we get data coming in, then we might see um, volatility building up or major moves forming. I'm not too keen to open any big trades before the shutdown ending. I mean, I need data, especially inflation and NFP data, which we didn't get the last two times that we were supposed to get inflation and NFP. So I need those data to see to initiate any big trades. All right. Let's say the correlation on gold and silver. Yes. So the both are shared monetary role. Let's say both are precious metals used as stores of value, let's say, or hedges against inflation or currency weakness, let's say. It's also macro drivers like interest rates, for example, or the dollar, and they affect the risk appetite. And silver is also not just a precious metal, but it also has some. It's affected by industrial demand, right? It gets affected by demand on electronics or cars or microchips, or it's also production or industrial related instrument. Gold is more hedge. Is everybody needs to have gold in their portfolio, especially central banks. So both somewhat behave the same, but are affected by different factors. For example, what I mentioned here in the economic calendar on Friday, for example, 2 in the morning GMT time. Depending on your country, you can modify the time to know when this data is coming out. For example, Chinese industrial production affects silver, right? Because it's affected by all of these different sectors that I mentioned, right? Electronics, solar, cars, microchips. So industrial production here, if you're trading silver, might create some volatility there. So what I would do with silver is I will wait and see if the data is actually confirming the consensus. Then I might expect to see some pressure on silver, right? Let's check on silver here. Let's check on the chart. Yes, you see, is correcting to the upside, but by Friday, which is around what is it, 14th? Yeah, Friday would be here, so we get another 3 candlesticks by that day. So probably you might want to start thinking about what happens if excuse me, what happens if we get bearish news for silver and it's also testing the upper band of the Bollinger Bands here. So probably we might see a retest probably around 52, and then some bearish correction to the downside, because as with gold, we will start building here our Fibonacci. As with gold, if we take that the trend started around here, right? And we see a retest on the 23.6, it's already too high. I mean, the price is already too high, probably near, is that the all-time high? 54 ish, probably, yes, right? Yeah. So if you're already $2 away from the all-time high, I would consider shorting it at the right time. I mean, around the right time, which for me probably is around 52. Right? We also have the stochastic oscillator in the extreme overbought levels, again hinting that we are already probably too high. So yeah, a short term might make sense for me around 52. All right. Let me know, guys, if you want to check any other instruments, any forex pairs or anything. Let me know in the comments. In the meantime, I just wanted to mention where you can find different data. Apart from the economic calendar, if you click on your account here and select manage accounts, you get to your personal area, which you can also find some obviously the economic calendar, right? The Exness economic calendar, where you also get all the 10th of November is yesterday. Okay, all the data that is coming up, so you know if you're trading what to watch out for. You also get some market news or analyst views here with different instruments. You can see forex, crypto, stocks, anything that you trade, or you can just straight up search it in the search bar here. Okay, you get some your Exness benefits, some trading conditions or savings that you manage to get on your accounts, and also your history, your performance, and some other important analytics that you can get from your personal area. Also, you can find Exness on YouTube. As I mentioned earlier, you can find a weekly video on trading ideas, which is quite successful, if I would say. I mean, we have some pretty decent success rate. You can find it Exness Market Outlook, or you can, yeah. We have also podcasts. We have the Market Outlook, some news. For example, you see, last week we had the Euro Pound pair idea. The week before that, we had JP Morgan. You can scroll through everything here. I mean, it's pretty interesting, to say the least. All right. And you can also find us on X. We tend to keep up with what's happening in the market. We share some charts, some price action that you can also follow, and some news about Exness in general. You can also follow me on my personal profile on X. I share every single Monday market updates on gold and crude oil. Every single Monday you will find a new article on my analysis on crude oil and gold. I mean, every single Monday. So you wake up on Monday, you want to trade. Where do I get my data? Let me go to Antreas' profile and see what's happening with gold and crude oil before I check anything else. All right. Okay. What else do we have here? Analysis on US 30. Yep. All right. So what do we see here? From the technical perspective, we see moving averages validating bullish trend. We see stochastic being in the neutral level. So what I like to do with indexes is build up my Fibonacci levels in the super short term or the latest swing, and try to find some entry points. For in this case, looks like we missed it by a couple of days. I mean, the entry point was again bullish steady trend, retest 38.2, target 23.6. This looks like it also already worked, right? We probably had the 23.6 met intraday yesterday, but what we can do now, we see today's candlestick currently is bearish. If it continues to the downside, I would initiate some long positions on 38.2 with targets 23.6. If it continues and crosses above the 23.6, then long trades with target around the 48,000, which is the previous, the latest high here in late October. So yeah, that's what I would do on US30. Will Bitcoin go up? Probably. I mean, eventually it will go up. I mean, that's what I believe, right? But in the meantime, I mean, currently I don't see any significant signs of Bitcoin shooting to the moon, having aggressive buying or anything like that. Again, unless we see any interesting piece of data after the US government shutdown, where in this case we will have new catalyst come to play. Probably we see the Fed probability rates shifting. If that happens, then most probably we're gonna see volatility building up and spikes happening on both gold and Bitcoin. So will it go up? I mean, eventually I think it will, right? But for the time being, probably it might go up again. Yes, I mean, probably I'm wrong, but I believe I am more biased on the short side. I mean, shorting Bitcoin for the super short term. I mean, probably until next week or something like that. Why? Because also we have a combination of two moving average. I mean, the 23.6 of the daily and the 38.2 of the monthly coexist around 106 and 107. So this area is quite strong technically, so that's why I am more biased to lower price for Bitcoin in the short term rather than opening some long trades for now, because I have a dynamic resistance between the two Fibonacci's. I have a price reaction area exactly between the Fibonacci's. I mean, we had the bearish correction exactly between the two Fibonacci's, and then it's quite strong area. That's what I'm trying to say here. And also the ATR 3800, even if it goes up all the way today, it can only go up to around 108,000. I mean, full volume, bullish momentum build up. So 108 still around this area. So yeah. What trade is buy for now? I don't think I get the question. Can you rephrase that, please? Sorry. All right. I don't see any more questions, so I think we can. I think we can wrap this up for this week. Um, Thank you everyone for joining us. Don't forget to follow us on all our social media platforms: YouTube, Instagram, Facebook, Twitter, X, and yeah, give us a like there, subscribe to the channels, get notified on when we have new episode of the podcasts, of the market outlook, of the trading ideas, of anything on X, market updates. We are quite active on these platforms, so yeah, if you follow Exness, you get notified super early on what's happening in the markets, and probably find some trading ideas for the weeks ahead. All right, so yeah, I think that's it. Thank you very much, guys, for joining us, and we will see you next week, same time, on our YouTube channel.